What's that? You're losing money on mining stocks? Well, let me turn that around. So if you are on any online forum, Facebook page, or anything else, you have certainly heard of a mining stock. Not crypto mining, I mean just mining in general. I mean silver, I mean gold, anything to do with lithium batteries. These are stocks that are doing physical mining within the earth. You might see them as unlimited potential. One has maybe the best drilling technology, so they're going to be the one providing to Tesla. I'm going to let you know that not all of these claims are true. Not all of these companies are going to survive, and not any single one of them is going to be the winner outright when it comes to supplying electric vehicles. The problem with most of these mining stocks that you're seeing promoted on Facebook are that they haven't started producing yet. Many of them have wild claims that they have the best technology, they have the best fields, they have the best land that is capable of the highest quality product. However, they have not started producing and selling that product to manufacturers. The problem with the majority of these companies is that they have not started producing yet. Most of the companies that you see that are promoted on Facebook or anywhere else are stocks that have not started producing or have not scaled up their production to the levels that people are trying to value them at. The largest culprit for this pump and dump is GRAT, G-R-A-T. Yes, they will be supplying graphene to electric vehicles eventually, but the problem with that is they haven't started mining yet and will not until 2022. Right now, they are in an insane amount of debt trying to acquire funding. And if you think that they are going to hit the exact dates that they decide are going to be production, you've never been a part of any form of construction. This company is not profitable and won't be profitable for another many years. Even after it starts producing and selling the graphene to these companies in order to help with the production of electric vehicles, it still has to recover all of the millions and possible billions of dollars worth of debt that it took to get the equipment and acquisition of the land required to perform their mining. And then there's the maintenance cost of having an entire mine with hundreds of employees and heavy equipment operators, huge safety concerns, and many more that are plaguing these companies once they finally begin producing. Right now, a majority of these companies are hovering between 50 cents and $1. Once they get up to $1, they start falling back down. They might have a support at 65 cents, 70 cents Canadian, but eventually those supports will fail once people lose confidence in the pump and dump that's currently happening on these stocks. It is impossible for a company that is not selling a product and that is not producing anything at this moment and is currently only acquiring debt to be able to catch up to an overvalue of their stock price. Many of these stocks will take off the moment that they start deals with electric vehicle companies and start actually producing the materials required. However, this will cause their stock to be extremely overvalued. Your best case scenario is to sell the news. The moment that the news comes out that they've started production and have these deals, that stock might go up 50, 100, 250%. But that is coming back down because they still have the same debt, they still have operations costs, and they still have a lot more catching up to do for their stock price. If you were to understand the scalability and cost of a technology company versus a mining company, you can see the easy difference. So you can take the example of Shopify. Shopify is an online retail store creation tool that allows individuals to create their own store, sell products, and make a profit. And then Squarespace takes either commission or monthly payment in order for people to run their store. This is scalable because the only things they need in order to continue operation is software development, and that only requires a smaller amount of employees at a lower pay grade than heavy equipment operators and many manual labor people at a mine. Not only that, but an influx of demand for Shopify only requires the addition of server space. So they need more technology and parts that might cost multiple millions of dollars, but it is a short-term addition that has immediate positive consequences. But if there's a higher demand for need of materials in a mining corporation, then that corporation has to find new plots of land that they can find their resource in. They need to find permits in order to properly develop that land without anyone kicking up a fuss. And then they also need millions upon millions of dollars worth of heavy equipment and new employees to operate that site. And then that site then takes at least a year to develop over time before it can actually produce and continue to sell product. So what do you do with a company that will not break $1 per share for the rest of this year? Well, instead of giving into the hype and buying every time it's overvalued simply because somebody on Facebook tells you to, then you want to look at the chart. Just in the 5-day moving average, I'll show you here, if you have the moving average of your stock still way below the current price, that means that this stock is overvalued. As well, if that moving average is far above the current price of the stock, then you understand that that stock is going to be dipping significantly because the price of the stock is worth far less than the current average that everyone had bought it at. So you're getting a lot of sell-offs that are going to cause that stock to go all the way down. So never buy a stock that is hype when it is more than 5% higher than the 5-day moving average, or if it is below the price of the 5-day moving average. What you want to buy is the sweet spot in between the supports and resistance. So if you have on your day, you see the moving average here, and then you have the price of the stock go down to its baseline below and go right up here and continue to bounce back and forth on that moving average, you know you have a stable price point that is looking to take off very shortly. So when you find those points, take your idea to invest. Make sure you look at previous highs of this stock and look at previous lows of this stock. You want to invest on a previous low and understand whether or not these supports have been held. You do not want to invest on a stock support unless it has been tested at least 3 times. If you know that it's gone down to 68 cents 3 times and consistently bounced back 5 to 10 cents after getting to that point, then you understand that 68 cents is a support that you can buy into. Then you take a look at the previous highs. If this stock has gone above and all the way to $1.10, but it consistently hits a high of $1.05 every time it goes up and crashes back down, then you'd want to set your limit sell for below $1.05 to make sure that you collect your profit once it hits and you're not missing just 1 cent below or 1 cent above. So I hope this was extremely helpful. There are many mining stocks that are following this exact same pattern, and I do not want you to be caught up in the hype and start losing money. In the description below is a list of all of the hype stocks that many people are currently coming to me about and also losing money on. You need to pay attention to those, look for these lines of support, and see if you can make money if you wanted to swing or day trade these, but they are not secure investments long term until you understand what this company is going to be doing with its mines. Yes, it can be a safe long-term investment if you watch for the lows and consistently reinvest whatever cash that you have into those lows and not worry about the highs and eventually sell once news comes of higher production. But ideally, I wouldn't be investing in a majority of these stocks until I have extremely positive news and I know that it is stable. I will not take the risk of investing in hype stocks regardless of the possible benefit, just because of how difficult it is to properly time your involvement in a hype stock. Thanks again for watching this entire video. It probably isn't as long as the rest of them, but you can watch the rest of my videos if you'd like. Support me on Patreon down in the link down below. Like the video, subscribe, and let me know if you have any other stocks that you want me to do a video about.